Good morning, everyone, and it is my great pleasure to welcome you to our virtual shareholder briefing for our Barbados and Eastern Caribbean shareholders. I am Samantha Chung, Executive Vice President of Sagicor Financial Company Limited, and I will be your moderator for today. As we were preparing for our annual general meeting, and despite our communications in print, press, and online, we wanted to go one step further to engage with all of you directly, albeit virtually, given the current pandemic situation. We are hosting today's briefing, and our executive team is available to answer all your questions. Before turning the call to Doddridge Miller, our Group President and CEO, allow me to introduce our panelists who are present today. Mr. Timothy Hodgson, Group Chair of Sagicor Financial Company Limited, Mr. Stephen McNamara, Vice Chair of the Board, Mr. Doddridge Miller, Group President and CEO, Mr. Andre Mousseau, our Group Chief Financial Officer, Mr. Ravi Rambaran, President and CEO of Sagicor Life Caribbean, Mr. Ed Clark, General Manager and Executive VP, Sagicor Life Barbados, Mr. Paul Innes, General Manager and Executive VP Designate, Sagicor Life Barbados, Mr. Don Austin, President and CEO of Sagicor Life Eastern Caribbean, and Ms. Althea Hazard, Corporate Secretary, and myself, Executive Vice President, Investor Relations. We also have several directors who are present on the call. Doddridge will give some remarks this morning, and Ravi will comment on how we managed through the pandemic. At the end of the presentation, if you have a question, kindly enter your question in the chat widget at the bottom of your screen within the Zoom platform. I will read your question to our panelists. With that, I'll now turn it over to Mr. Doddridge Miller, our Group President and CEO, to give an overview of today's session. Doddridge?
Thank you, Samantha. Good morning, shareholders. My remarks this morning will touch on our financial performance for 2019, the strategy that we've been executing for some time, our financial performance for the first quarter of 2020, our outlook for the remainder of the year, and as Samantha said, Ravi will give an update on our response to the pandemic COVID-19. So turning to the financial performance for 2019, we had very strong performance, operating performance for the year. Group net income, excluding AlignVest transaction expenses, amounted to US $147.5 million. And this is to be compared to US $102.9 million for the same period of 2018. Net income attributable to shareholders, excluding AlignVest transaction expenses, was $87.4 million compared to US $36.5 million for 2018. You will recall that 2018 was impacted by the provisions for the government of Barbados debt restructuring. Group revenue grew by 35% to reach US $1.9 billion compared to US $1.4 billion for the same period in 2018. Growth was experienced across all segments, including growth in insurance premiums, particularly in our US segments, net investment income, banking revenue, and fees and other income. Benefits increased by 46% in line with the growth in business, and our operating expenses grew by 11%, reflecting the general change in business across all segments. Turning to our strategy, we continue to execute on our strategy of organic and inorganic growth in our core markets in the Caribbean, accelerated growth in our US segment to achieve operating scale, optimizing our use of capital through our captive reinsurance company, Sagicor Re Bermuda, increasing our use of technology across all segments to introduce new modern distribution methods and reduce operating costs, and introducing a new redefined suite of products and services that are fit for the changing environment. As it relates to the AlignVest Sagicor transaction, the transaction was approved by you, our shareholders, in June of 2019. Regulatory approval was finally received on December 4th, and the transaction was completed on December 5th of 2019. With this, shareholders of old Sagicor became shareholders of Sagicor Financial Company Limited, new Sagicor, and the shares were converted at approximately 4.32 old Sagicor shares for one new Sagicor share. This ushered in a new era for Sagicor with a listing on the Toronto Stock Exchange. We are aware that the process has not been as seamless as hoped for, and we're working with the TSX, our international brokers, and our local brokers to improve your shareholder experience. We're also aware that there were issues and challenges with receiving the dividends. Among these were the long lead time it takes to receive the dividends in the mail and issues around depositing US dollar checks in local banks. Again, we are working with the TSX Trust to improve the dividend process. The partnership with Allianvest and Sagicor was designed to deliver quite a few benefits to you, or Sagicor shareholders. One was a listing on an international liquid stock exchange. Two, access to new capital to fund our growth. And three was price discovery, as evidenced by a share price that reflects the intrinsic value of the company. The partnership has so far delivered the listing on the TSX, and we have over 400 million in new capital to fund our growth. However, the share price has yet to perform as expected. Along the time to close the transaction essentially turned off many of the potential Canadian investors. And despite our strong 2019 results, the global pandemic have overshadowed most of everything, and we have not been able to re-engage with the Canadian market. This has left us with insufficient demand for the current level of supply for our shares. We remain confident that the TSX will deliver a better price discovery than we've experienced before, and we're looking forward to re-engaging with the Canadian investor market in the coming weeks and months. We have also announced a share buyback program to bring some stability to the share price while we re-engage with the Canadian market. We announced several transactions towards the end of 2018 and early 2019. Three of these were the Bank of Nova Scotia Jamaica operations, the acquisition of the Bank of Nova Scotia Jamaica operations to close in 2019. Bank of Nova Scotia Trinidad and Tobago operations to close in 2020, and the Clico-Baco portfolio, which we expected to close in 2019. Turning first to the Bank of Nova Scotia Jamaica acquisition, this acquisition was canceled due to the late completion of the Allianvest Sagicor transaction. The BNS Trinidad acquisition has encountered some regulatory hurdles, which in our view will impact the economics of the transaction, and we do not expect this transaction to close. The Baco-Clico transaction remains outstanding and is awaiting final approval. During the fourth quarter of 2019, our subsidiary Sagicor Group Jamaica acquired 60% of Advantage General for US $31.5 million. Advantage General is a highly profitable P&C company specializing in the motor business in Jamaica. With this acquisition, Sagicor Group Jamaica has expanded its range of services to include property and casualty insurance products. Turning quickly to the first quarter of 2020. The first quarter of 2020 was overshadowed by the global pandemic COVID-19. As of today, just under 9 million people have been infected by the virus, with about 500,000 dead across the globe. Countries responded with border closures. Travel ceased by the end of March. Countries, states, and towns instituted lockdowns and stay-at-home orders. Business globally ground to a halt, and global GDP declined significantly. Consistent with most, if not all, companies across the globe, our first quarter results were impacted by these events. Net income to shareholders was a loss of US $29 million, compared with a profit of $15 million for the same quarter of 2018. The majority of this variance was due to the mark-to-market losses on assets and repricing of risks. Absent the effect of the pandemic operation, our operations were strong. Adjusting for this impact, our normalized net income for the quarter would have been a profit of 18 million compared to 15 million for 2018. We are happy to report to you that asset values have had a meaningful reversal of losses since the end of March. Turning to the outlook for the remainder of the year, our outlook for the remainder of 2020 remains uncertain. We expect the outcome to be within the boundaries of our internal stress scenarios. Fortunately, Sagicor has capital of US 1.7 billion and liquidity of about 400 million to weather these events. Management is also taking measured steps to mitigate the impact on operations, and we are assessing the extent to which work from home for many of our employees can become a permanent feature. We're also accelerating our use of technologies across our business segments to support our new approach to engaging with our customers in our markets. We believe that many of the innovations introduced for the pandemic are here to stay, and Sagicor is redefining itself to operate in a post-COVID-19 world. Thank you. I will now ask Ravi to give an update on COVID-19, and then we'll turn it over to Samantha for questions. Thank you very much.
Thank you, Doddridge. Good morning, shareholders. So, COVID-19, Sagicor's response was guided by one objective: the protection of life, the safety of our clients, our communities, our staff and advisors. We operate across many countries, and our guiding principles to achieve that objective was speed and compassion. So firstly, Sagicor allocated $1 million to help combat the impact of COVID-19 to our communities. Certainly the first to do so within the Caribbean space. With respect to engaging our communities, our staff and advisors, and our clients, firstly, let me explain for our communities. Through the health authorities in the various countries, we funded the acquisition of personal protective equipment, ventilators, testing equipment. At the same time, we recognize that with the contraction of economic activity, the vulnerable in our society were at risk, because COVID-19 has the potential to deepen the inequality within our societies. So we immediately started to engage in activities to provide food relief, to provide healthcare relief to the homeless across the various countries, to the orphanages across the various countries, to the elderly care homes across the various countries. At the same time, many of schools were closed, and we recognized that there was a gap. We funded the provision of online teaching programs for those students who were supposed to write exams. So both at the CSEC level, at the CAPE level, and also at the SCA level. So from a community perspective, we were very much engaged. And these actions were in addition to the various actions by our own staff and advisors in engaging their communities also, practicing social distancing guidelines. The second group, our clients, we recognize again the material uncertainty facing many of our clients. So we immediately instituted that we would not terminate any of our policies or contracts for 3 months, because we recognize that with uncertainty, individuals will require time. We also instituted the deferral of all premiums for 3 months, the deferral of all mortgage payments, whether residential or commercial. We accelerated our digitization plans because we still had a group of clients across various countries who did not use electronic means. And we were able to certainly reduce our interaction with that group through non-electronic means to electronic means. So that was actually a success. At the same time, we gave the comfort and assurance that Sagicor would honor all COVID-19 related claims from any part of our business. For our pensioners, our other line of business, we paid pensions early, in many instances 2 to 3 months early. For those clients on our medical policies, we provided credit so that they could access pharmaceuticals for up to 3 months upfront. And we did not retreat. Also, we recognized that we had frontline heroes who were there protecting our lives, but who were frankly uncovered. And so we also launched our Sagicor Healthcare Heroes Plan, which frankly has been selling like hot bread. From a staff perspective, we roll out where we in our business continuity plan, and I must say it worked quite well because from the mid of March onwards, 100% of our people were working from home. And the feedback from our clients is that to a large extent, they did not see the difference between working from home and working from the office. And we have had tremendous cooperation from our staff. In all of this, in all of these periods of uncertainty, Sagicor engaged in frequent, and we continue to do so, town hall meetings via Zoom to our clients across all countries, to our staff, our advisors, and generally the feedback was very positive. We were seen as, frequently engaging and caring, which is all of these actions are consistent with our vision of improving the lives of the communities in which we operate. And even now, as countries have engaged in various phases of reopening, currently only our frontline staff observing the necessary health and safety protocols are back to work. We continue the majority of our people to service our clients through our work from home policy. So overall, I would say that, thanks to our hardworking staff and advisors, thanks for the communities for, embracing and accepting our engagement, and thanks to our clients also for that. I'll now turn back to Doddridge.
Thank you, Ravi. Samantha, we can now open up for questions.
Great, thank you, Doddridge and Ravi. Let me remind you, if you would like to ask a question, please enter your question in the chat widget at the bottom of your screen on the Zoom platform and include your name with that question. I will read the question to our panelists after you enter that question. So we'll pause a moment to allow questions to come in. Thank you. Okay, we do have one question from Aisha O'Neill. Can you provide further clarity on the NCIB program announced and what it means for small shareholders? Is it a means which enables shareholders to sell back their holdings to the company? If so, would this or these other transactions incur brokerage and stock exchange fees?
Samantha, I'll shift that to Andre.
Great, thank you. Andre?
Thank you, Samantha, and thank you for the question. The NCIB, or the normal course issuer bid, is a mechanic by which Sagicor can go into the market directly and repurchase its shares, and those shares would be held for cancellation. And so the logic behind that is by putting a bid into the market, we will provide additional liquidity for those shareholders who are seeking an exit, as well as provide the market comfort with respect to our view on the valuation of our shares, in that a repurchase of those shares by the company will be accretive to all shareholders who remain. Those purchases are done over the Toronto Stock Exchange. So it sets a bid into the market. Any shareholder can avail themselves of selling into that bid through the normal mechanics of a sale over the exchange. So as such, any transaction are subject to the same fees and commissions that any other trade over the exchange would be.
Great, thank you, Andre. Our next question comes from William Lane. If I have an account in Canada, can I have my dividends paid into that account? Perhaps Doddridge?
I'll ask Althea to answer that question.
I would say that that would be subject to any exchange control requirements.
Thank you, Althea. The next question comes from Beverly Beckles. At what rate will you be offering the buyback of the shares? I think Andre?
Thanks, Samantha. The rules around the normal course issuer bid are that it must be passive, in that we accept the prevailing trading price at any given time. So wherever the bid in the market is at that date is the price at which we would be bidding to buy shares. And again, this is a mechanic to put a bid into the market. A seller of shares would not necessarily know that they are buying from Sagicor through the normal course issuer bid or from another market participant.
Thank you, Andre. Our next question comes again from William Lane, and he asks, are there plans to have a dividend reinvestment plan in place? And I believe that's Andre again.
I can take that again. We did talk about in our initial offering circulars about putting in place a dividend reinvestment program. Our analysis to date has been that while it would be straightforward to provide one for Canadian shareholders, that there were regulatory challenges for many of the jurisdictions in the Caribbean. And so until we were able to solve that, we did not want to put something in place that could only benefit the Canadian shareholders and not the others. You know, from a practical point of view, at this point, I think our emphasis is going to be on supporting the normal course issuer bid and providing liquidity to shareholders if they need it.
Thank you, Andre. Our next question comes from Olivette Hines. How far are we in resolving the issue with the dividend checks? Is there any possibility of a deposit to a US dollar account? I believe that question would go to Doddridge or Althea.
I think Althea can take that, but the answer is going to be very similar to the one that was given to William Lane. As to the first part, we're in fairly advanced discussions with the TSX to try to resolve the dividend issues. But in terms of the deposit to a US dollar check, again, if you're a Barbadian shareholder Althea would guide you that it depends on exchange control.
Correct.
Okay, thank you, Althea and Doddridge. Our next question comes from Dwayne Baker. At the annual shareholders meeting in 2017 in Barbados, I posed a question expressing concern about the increase in issued shares for SFC. At the time, I received a response from Mr. Rembrandt that the increase should be welcomed as it formed part of the incentivization for executives. It is quite instructive that now the company is seeking to buy back shares to improve its value position. While I appreciate the situations are fluid, I believe that better care can be taken in attending to the shareholder concerns, many of whom may be reluctant for whatever reasons to express their concern. So it doesn't seem like there's a question here, but there's just a comment. Does Doddridge or Ravi, maybe Doddridge, you'd like to just comment on that statement?
I'm not sure I am understanding the issue that's being raised, and I certainly don't remember the question from last year. So if the shareholder would like to give us better clarity, I will be happy to respond.
Thank you. Let's move on then. I do have a question from hold on one second. There's several questions that are coming in that are of similar themes, so I'm just sorting through the question here. What advice would you give to small shareholders at this time about staying or selling the shares? I think, Doddridge, you could probably address that question.
Well, Samantha, I think we should stay away from giving investment advice to our shareholders. What we can tell them is the value of the company, the plans going forward, and our expectation as to how the company will perform. And shareholders must therefore make up their own minds with that information.
Exactly. Thank you. Just give me a moment here as I sort through the questions. Okay. Here's a question from Gerald Spencer. Will the 3-month moratorium on premiums run to the end of the year? Maybe that's a question for Ravi?
Sure.
So initially, we indicated to our clients that the moratorium would be reviewed at the end of June. So what we'll be doing is we are still doing our internal analysis and having our discussions. At the end of June, we will re-engage our clients and present to them our views on that. So that is more client-related view. So I'd rather do that then. Okay.
Okay, thank you, Ravi. The next question comes from Mr. Andrew Bell. His comments are as follows. I commend the team for interacting with us in this forum. Given the prolonged low interest rate environment and large exposure to regional debt, which is prone to asset default, will this lead to a repricing of our products in the region, across the region?
Samantha, this is Doddridge. I'll take that. The current environment has not prompted us to reprice our products at this time. As I indicated earlier, our performance has been strong through 2019. And we expect the issues of the pandemic for 2020, while it remains uncertain, not to impact us in such a way that we need to reprice our products. We will be reintroducing new products which are fit for the environment, but these are more in line with how we engage our customers rather than at what cost.
Thank you. There's another question from Mr. Andrew Bell. Since the Scotia, Jamaica and Scotia Trinidad transactions are no longer on the table, are there other acquisitions being considered given the heightened level of risk in the market? I would say that would be Andre.
Sure. I think that the short answer is yes. We are very well capitalized in terms of the amount of liquidity that we have on our balance sheet, and we see the current market environment as potentially shaking loose some acquisition opportunities. And so we could say that in addition to the transaction, which is public in Trinidad with respect to the CLICO and BAT portfolios, where we are under contract, we're looking at multiple other opportunities as well that are not at the stage where they're ready for public disclosure. But Sagicor has a long history of successfully executing and integrating acquisitions, and that's a key part of our strategy going forward.
Okay, thank you, Andre. Let me just sort through the questions here. There's another question in terms of re-engagement of the Canadian market and the benefit. What is the time frame to re-engage the Canadian market so the benefit of better price discovery anticipated can be materialized? So Andre, you can answer and I can add to that if you like.
Sure. So the time that we're doing so is now, concurrent with this engagement with our Caribbean shareholders. You know, as Doddridge talked about in his opening remarks, it took a long time between the transaction when it was announced towards the end of 2018 to get it closed and completed in December of last year. And it's our sense that we need to re-engage with the Canadian investors. Our original plan to do so was going to be on the back of our 2019 numbers, which again, as Doddridge pointed out, were very strong and in fact ahead of the guidance that we had given to the market. Unfortunately, by the time those were out, the world was in the depths of the COVID environment at the end of March, early April of this year, and the market really was not receptive to hearing new ideas. Now that we have our Q1 results out, we are starting to re-engage with the market now, and we'll continue to do so over the summer. We've started to see very early signs of some engagement from the Canadian market. Just on Friday, we saw a buyer transact on nearly 250,000 shares, which would have been the equivalent of over 1 million of old SFC shares. And it's our belief that that's from a new fundamental buyer of our stock. So we're optimistic that this engagement can bear some fruit over the coming months.
Thank you, Andre. And there's a question from James Gatesworth. Does the planned acquisition of CLICO have anything to do with their flexible premium annuity? If so, how does the prospect look? Ravi? The question is on CLICO.
Yeah, so thank you, Samantha. The acquisition of CLICO relates to their traditional insurance portfolio, which excludes the flexible premium portfolio.
Thank you, Ravi. Let me sort through the questions here. Right, okay, so there's a question just to reiterate the benefit of the NCIB, and given the sharp decline in the share price since the listing and understanding the risk investing in equities, are directors sure that the NCIB is in the best interest of all the shareholders? Maybe, Andre, you can just reiterate your messaging in that regard.
Sure. Well, in terms of the direct question, we certainly sought and received board approval for the normal course issuer bid. We believe it to be a material activity of the company. I think the benefits are really two or maybe threefold in terms of one, putting a bid into the market and providing liquidity to shareholders if they choose to avail of it today. Second, we do think that our stock is quite undervalued relative to any measurable metric that one could choose, and so to the extent that it signals that that is management and the company's belief, we think it's important for that signal to be out there. And then the last piece is, to the extent that the company is able to repurchase shares below book value, that will be accretive, meaning it will add to the book value per share for all shareholders that will remain. So certainly if you're a shareholder who's just holding on and holding through this, to the extent that we are able to repurchase a meaningful amount of shares below book value, the book value per share for all remaining shareholders will increase.
Great, thank you, Andre. The next question is also for you. Is there any consideration to refinance the $320 million bond?
Yes, there is. As disclosed in our public materials, including our bond materials, we would have to pay a modest premium to do so, which reduces to about 2% of the bonds as of August of this year. If you look at the interest rate that we're paying on those bonds at nearly 9%, we certainly would have an expectation of being able to refinance those at a better rate. I would say that had the pandemic not happened, we may have already had the ball rolling on that. But as soon as the market window opens, that'll be a high priority for us.
Thanks, Andre. The next question comes from Maureen Chung. And she's asking what arrangement is being made for shareholders that have taken the maximum offer and are left with small holdings ranging between 10 and 20 shares to sell these shares given the cost associated with the sale. Doddridge or Althea?
Samantha, that is a question that we're looking at. We understand the issue. It's an unintended consequence of the 10,000 share limit that we put in place. But we have to be mindful of how the market works. But it is something we're examining, and we'll come back to shareholders with a response to that question in the near future.
Thank you, Doddridge. Okay, just give me a moment as I sort through the questions here. Okay, so there's a follow-up, Doddridge, just to the question earlier, the comment posed by the shareholder on the dilution with regards to the shares at the time of the transaction. But I think he's just seeking clarity about concerns about the dilution in the shareholder value at the time of the transaction when the transaction was done. So I think maybe you can just reiterate the comments surrounding the transaction and then the share buyback impact that we're enacting over the next 12 months.
I would just remind the shareholder of what we said about the transaction. The transaction would give us a listing in the Toronto Stock Exchange. It would provide us with access to capital, and we now have $1.7 billion in capital and $400 million in cash and balance sheet. And we believe that the dilution at that time was well worth the benefit of doing so.
Great, thank you. There is a question from Lorna Davis on executive compensation. Will the executives' benefits also be reduced in line with the market contraction company-wide and global, given the global decline in GDP and our performance in Q1?
Samantha, we said earlier that we are looking at measured initiatives to mitigate the impact of the global pandemic on the company. And these will include a look at executive compensation across the group as well.
Great, thank you. There's a question on our dividends. What is the likelihood of maintaining our current dividend in this environment? Andre or Doddridge?
Samantha, when we announced the last quarterly dividend, we also indicated that given the environment, we will continue to keep the dividend under review. We have not yet taken a position on where our dividend would be going forward.
Thank you, Doddridge. Let me just take a moment here to review the questions that are coming in. There is a question from a shareholder, Roger Cave, on just the mechanism, of the mechanism for shareholders to buy and sell shares of the new Sagicor shares on the Toronto Stock Exchange. So perhaps someone can comment, remind Mr. Cave on the process with regards to how he might buy and sell shares in the new Sagicor entity.
Samantha, if we have someone from SAMI on, I think they would be best positioned to answer that. But as I understand it at the minute, local investors will have to have an account with a broker who can trade on the Toronto Stock Exchange. Our investment group, SAMI, has established a relationship with Interactive Brokers, and Interactive Brokers trade on the Toronto Stock Exchange. So working through SAMI, local investors can actually effect trades on the Toronto Stock Exchange, but they must first have an account with SAMI, and who will have an account with Interactive Brokerage.
Right, exactly. Okay, just give me a moment as I sort through the Just one point of clarification on the earlier question with regards to the dividends being credited to U.S. accounts with Canadian banks. And so this can be done by the TSX. Instructions would just need to be given to the TSX to deposit that dividend to a U.S. dollar account by a Canadian shareholder, or by shareholder with an account with a Canadian bank. So I think that process can be completed quite easily. Just give us a moment. I don't see, just give us a moment here. There is a question from a shareholder, Alana Allen, and this shareholder says, I have a US dollar account. Would I be able to use this to purchase more shares using this account? I think the answer would be, and maybe others on the line can answer, I think the answer would be depending on what kind of account that is, whether it's a brokerage account or what. So we would need more clarity, I think, and to answer that question appropriately. It would depend on what kind of account that is in order to trade. You basically need a trading account or a brokerage account to properly trade the shares on the TSX. So just give me a moment while I sort through this, a few other questions here. Let me remind you, if you have any other questions, please put them in the chat line at the chat widget down below. We'll just pause for a moment. I don't see any other questions, but I'll just pause for a moment to see if there's any last questions before we conclude. So let me just pause for a minute. Okay, seeing as there are no further questions, thank you all for your participation today, and we hope that you found the question or the session useful. And please don't hesitate to reach out to us after the call should you have any questions. We do encourage you to participate in our upcoming audio-only virtual AGM on June 30th at 11 o'clock a.m. Eastern Time, if you so desire. The link is available. All information is available on our website. If you need additional help and assistance in obtaining your control numbers to participate in that meeting or to place your vote, please contact our transfer agent, the TSX Trust, through a dedicated Sagicor email at sagicor@tsxtrust.com. Or if you wish to contact us directly, you may email investorrelations@sagicor.com, and a team member will answer or direct your inquiry. As well, I remind you that all relevant shareholder information, including important notices, press releases, and various forms are available on the Shareholders tab of the Investor Relations section at www.sagicor.com. And
Samantha, this is Doddridge. I would just like to make two last comments before we close.
Yes, please.
And just to let shareholders know that at the end of 2019, Dr. Pat Downs Grant retired after nearly 3 decades of invaluable service to our company. Pat has served our company in several important positions, including head of investments, group COO, and CEO of Sagicor Life Southern Caribbean. She has been involved in many of the major initiatives which have transformed our group over the years. Pat will continue to serve as a director on many of our subsidiaries across the group. We wish her well in her retirement. Also, Samantha, at the end of June 2020, Ed Clark, our general manager of Barbados operations, also retired. Ed has been a major contributor to the group, not only in managing the Barbados operations, but across the Sagicor group. He's also been a major contributor at the level of the private sector and Economic Oversight Committee for the government. Ed will continue to lead several strategic projects within the group for at least the next 3 years. And I will also like to wish Ed well, but he continues to work. I will offer Ravi or Ed an opportunity to introduce our new general manager of Barbados, Paul Ennis. Paul joined a couple of months ago and shadowed Ed up until the end of June. So Ravi or Ed, I'll give you a brief moment to introduce Paul.
Okay, thank you, Doddridge. So Paul is now the youngest member of our team. Paul prior was the CEO of Pan American Life, certainly based in Barbados, but he brings to the fore a wealth of experience in distribution. He's also an insurance expert in all lines, life, property and casualty, and really strong management experience. So we are fortunate to have gotten Paul and convinced him to be a member of our team. And Paul was actually our first recruit in terms of working from home. I think it took him about 2.5 months to actually get inside an office. So we certainly are pleased to have Paul as a member of the team and look forward to his contribution as we navigate what is a difficult period within the region.
Thanks, Ravi. Back to you, Samantha.
No problem. Okay, so that concludes our time today. Thank you very much for taking time out of your day today, and we thank you for your ongoing support and for our company. And this concludes our call for today. Thank you very much. Yes?
So just to remind shareholders that if we haven't answered your question, we'll respond and place the answers on the website.
Yes, we will. Absolutely. So please send in your questions if you have additional questions. Thank you.